What's going on, Money Morning Live? Nice hearing about Ethereum and what may be happening with that with Brandon and Nick Black. But right now, it's time for Tom Gentile. Exciting things happening today that he's going to be discussing. So let's not wait. Let's bring him in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to Power Profit Trades. Today is part 2 of a 3-part live series we're doing, and we're focusing on how I trade the trend and something we use called quantum scripts. So today, what I want to do is a quick review of yesterday. I want to talk about getting rid of the noise because we had 65 stocks that popped up on yesterday's scan. I want to cut that in half at least. So get your notepad out. And we are about to begin. Eric, what is going on, my man?
What's up, Tom? All is well here. I'm excited about today because, well, it's the last day that anyone that's watching our show here can get themselves involved in Surge Strike, Operation Surge Strike, for 93% off. It ends today. I believe at 1 o'clock. Don't quote me on that. But if people want to get involved, your last chance right now, call the number on the screen. Even though that's not going to be the heavy talking point of the day, it's important that everyone knows that that's going to be ending today. So don't miss out.
Yep, absolutely. And, you know, once something ends here, it doesn't come back. It doesn't come back for quite some time. So, in fact, guys, let's go ahead and move right into what we're going to cover today. So yesterday, I talked about everything from rules-based trading and how everything we do here, whether it is regarding Operation Surge Strike, like Eric just talked about, which is a volatility-based system, or the money calendar, which I'll be talking to our Fast Fortune Club later today. We'll be going to money calendar. That's a seasonal-based strategy. Or what we're covering in this 3-part series, which is trend-based strategies. These are all rules-based patterns. That means we have a specific set of rules that we follow, and we go through a number of different things in our rules. In fact, when it comes to rules-based trading, this is what we do. Yesterday, I talked about researching the pattern and creating a set of rules for entry and exit of the pattern. Now, I'm going to get into back testing, but really want to do a quick little review, talk a little bit more about what we covered yesterday, which was I think it's one of the oldest trend trading indicators in the book, and that is a moving average crossover. And so I'm not going to get into what we talked about yesterday. You can go back and do the replay if you want to see part 1. But we did discuss the 10 and 30 crossover, and that we are looking for bullish crosses when the 10 crosses above the 30, bearish when it crosses below the 30. I showed you an example what a chart looks like when this happens. When you get an upward cross, in this case, you're getting the faster moving average. That's the 10-day that crosses above the 30 and gives us a buy signal. And then subsequently, when the 10 crosses below the 30, that's the time to get out and then possibly get short. Now, if you follow this to the T, you're never going to be in cash. You're always either going to be long or you're going to be short, okay? So keep that in mind. Now, we also did some stuff. We did some scans, and I ran some scans using this moving average filter, and I want to show you some of the stocks that popped up today and why this stock list is a little bit different. We'll get into it, but let me just share with you real quick a couple of stocks. One that popped up on the screen was Chewy's. So Chewy's is that company that delivers pet food. And not only that, but cat litter. Let me tell you what I love about this company the most fundamentally is that I don't have to lug around 20 and 25 and 40-pound bags of cat litter from the store to the house, because these guys deliver it. I watched the FedEx guy, and it comes FedEx too. I watched the FedEx guy take this stuff off the truck, and I mean, I feel his pain when he goes from the road to the front door with this stuff. But all that being said, if you're looking at the strategy, you might love the company, but according to quantum, according to the 1030 moving average, at least to the negative crossover, we have a sell signal. Now, there's something else that's going on with this one that might make it even a little bit more interesting. But you can see right here that it has been on the upswing during this entire chart. Came very close to crossing back here in, looks like it was beginning of August. That didn't happen. But end of August, yes, we're getting the cross. It's also interesting to note that we're down here near an area of support. If we close where we are right now or lower, we've broken that support area, and that could tell us that we could see significant moves to the downside. That's Chewy. Let me just show you a couple more here. Let's scroll through. This is Vanguard Telecom Services. All of these are going to show recent sell opportunities. Here's an interesting one right here. This is PIMCO, right? This is that high yield ETF. And the high yield ETF had a buy back in the high 80s, and it just sold again right in the low 90s. We've got a sell, a lot of support down here around 88. Again, all of these, the same thing they have in common is, in this case, you can see where the buy signal came in with CPRT, Copart. That came in just around 112, 113. Look at the sell signal up here around 120, and it seems to be continuing to break down as well. What's happening? The 10 is crossing below the 30. All right. ROP, same thing's happening with Roper. Okay. Citigroup. I want to stop right there. So take a look at Citigroup. Citigroup had some great earnings, and it's been interesting. A lot of the folks on mainstream media just cannot figure out why bank stocks are not going higher as interest rates are going higher. And that is because bank stocks are under pressure with their own earnings, and they've got their own situations when it comes to costs. And so what's happened is we've seen that moving average cross kick up around 51. Well, it waffled there, right? We see that move where we went up, came back down, went up, made a couple of new highs. Oh, what was that? Not even 2 weeks ago. And we've fallen ever since from 54 down to 49. That's a 10% drop just right there. Well, guess what? Yesterday, we saw Citigroup give a sell signal just simply on the first two lines of quantum code. Now, again, the big point I'm trying to stress here is that if you put this across 500 stocks, when you get moves like we're getting right now where the whole market's rolling over, you're going to see a lot of bearish opportunities. Which ones are the best ones to take? And that brings me to today's lesson. And the problem, because with every single strategy, with every single indicator, there's always a problem you got to go through. And the problem with the moving average crossover, you get too many of them at some time. And sometimes you also, when you're in a non-trending environment, you might be a situation where it says buy. No, sell. No, wait, I'm sorry, buy. Oh, my bad, sell. And so you get caught in the noise. I like to call that noise is also referred to as the chop. When you're in a non-trending area, okay, you get noise. And noise will cause buy and sell signals to come and go. Now, the good news is when you're using a trend trading strategy like a moving average crossover, if I could go back to that for a moment, you're not gonna get huge losses, but they will come. And in a lot of cases, and sometimes you may see more losses than profits. That's where we go in and we start to create the scripts. And one of the scripts we have is something called a noise filter. Now, a noise filter is designed to remove much of the noise, much of the chop, much of the area where those little losses come in, right? Because if we can get ourselves to where we have a trend trading system, and when it works, we make more money than when it doesn't work, but we can also win more than we lose, then we've got something, okay? And that's the piece that I want to talk about with you today. The noise filter will take us from those areas, and I'm going to take you from 65 stocks to 27 stocks, and by the end of the day today, we're going to drop it down to just 5. I'm going to give you my top 5 before I'm finished today, okay? And then we're going to work with that top 5 to create the best trade. So, in fact, those of you that are Quantum members in the room right now, all right, you subscribe to Quantum Data Profits, then you know we went 11-0 as of yesterday. Well, guess what? Add 2 more winners to that today. APA and Moderna, MNRA, both hit some profit targets there. We're exiting out of those 2 particular trades. Check your inboxes if you haven't seen them already, and congratulations. Now, again, what separated APA and MNRA from the rest of the pack? The noise filter was a big part of it, okay? So we use the noise filter, and the other thing we do is we do tons of back testing on these stocks to find the ones that are signals that all of our quantum scripts work the best through. So let me take you through quantum scripts and talk a little bit about the noise filter. So if we use the 1030 cross as our first two lines of code, right? But we add in the quantum noise filter. What that does is that cuts out the noise. And when you cut out the noise, you generate fewer signals, right? But they're more quality signals. Now, what we'll do is we'll still take our bullish signals. But the other thing the scripts have found out by doing the back tests is that our bullish signals take longer time frames to maturity. So we're looking at those 30 to 60 and even possibly 90-day market outlooks. But when volatility is high as it is right now, we're trading in around the 30 to 60-day time frame. Bearish signals, like the ones you're going to see today, typically take shorter time frames, 30 days or less, right? So we're going to be looking at bearish signals today. And again, let's take a look at some more of those scans, Eric, on the 27. So from 65 stocks yesterday, we ran the noise filter and eliminated half of them. And so here is the scan, the quantum bear scan that you see right here. You'll see stocks like Penn National Gaming is in that list. Crown Castle's in that list. Texas Instruments is in that list. Okay. Adobe, 3M is in the list. There's Citigroup. There's Copart, we talked about already. There's Chewy's. Whirlpool is in here. Shutterstock, Manpower Group. Let's have a look at these. And I'm going to jump back into the stock chart. We're going to blow this up a little bit so we can see this as best we can. There you go. All right, we stopped off with Citigroup. Let's kind of continue on. Here's CBRE. CBRE had a really nice buy back, and this was back in the middle of July, down here in the 76 mark. Look, this thing went from 76 all the way up to 88 before getting the pullback, right? Now, I'm going to get a little ahead of myself right now, Eric. I hope you're okay with this.
That's fine
But
with
do
me.
you think you could make some money buying call options when you get a signal like this at 70? Let's call it 75. Can you make some money from 75 to 85, from 75 to 86, 88? Can you double your money on call options? Yeah, there's a very good chance you can. Spreads even more so. Well, CBRE just turned over and is dropping to the downside. So we'll be looking at potential put options or put spread plays in this case. That's CBRE. Let's continue on. EMB, this is the iShares JP Morgan Emerging Market Fund. Right? It emerged higher during the months of July and August. The sell signal kicked in just yesterday, and you can see there that that now we're seeing an area where we're at 80. The sell signal comes in right around the 86 half mark. You know, one of the things we like to look at, and Quantum Scripts does this too, is how far is it likely to go? Now, what Quantum Scripts does is we go back in time and we back test these signals. We only take the best ones, and then we look at the average move. But if I were looking at the chart right now, like many of you are, you can see here 82 is the area of support that we see. So if we're at 86 and we're targeting 82, again, I say to myself, what can I do? I could short the stock. I could buy puts. I could buy put spreads. There are a number of things we could do here. But the big question on my mind is what's the percentage chance I could double my money from here to here? And I'm going to look at picking the best option trade for that. All right, that's EMB. Here's Generac Holdings. Generac, you know what they do? They do generators, portable generators, whole house generators. Buy signal around 225. Look at the sell signal just below 225. So it flipped. It had a buy signal. I mean, it did go from the 240 area up to 280 within a matter of a couple of days before the earnings came out. Then dropped back down, then rebounded, and has been on the drop down with the rest of the stock market over the last couple of weeks. It is giving us a rollover signal too. Is it the best signal? Don't know. Actually, I kind of do already, and I'm gonna get you those signals in about 10 minutes. How about Adobe? Adobe had a buy signal back at 390. That was back in the middle of July. And you can see 390 became 450. I mean, that's 60 points, folks. That's 60 points. You don't have to hold all the way up and then all the way back down before you make a decision here. This is, can someone say trailing stop? Because we do that with quantum data profits. In fact, one of the trades we got out of today at a profit was a trailing stop. That was our quadruple. That was our grand slam. We moved our trailing stop up and it hit today. So we took profits on it. But here, now all of a sudden, Adobe is saying, sell me. Is it the best trade, however? That's still to be determined. Next, 3M. So here's 3M. 3M actually, now 3M looks good down here till you see that the trade actually was at around the 142, 144 area. And it did pop up to 152 before dropping. Big drop down. That was last week when we had the big drop in the overall market. But boy, did 3M take it on the chin, going from 144 all the way down to 128. And then here's the thing. If you thought that was overdone, take a look at the next candle. That was yesterday. The selling continues. Take a look at today. The selling continues. Quantum Scripts gave the sell yesterday morning. At around 129. Here we are right now, 124.29. This one's already 5 points on the run in our direction. Take a look at XPO. This is XPO Logistics. So XPO Logistics had the buy at 52 back in mid-July, ran as high as 60. Earnings came out, sell the news, obviously, and that's what ended up happening. You got that little dip down, back up, and now it's creating that lower high, lower low scenario. Yesterday gives the signal. This morning it was actually down a little bit. It was down, to monthly lows, pulling back a little bit here. But again, the question that you need to be asking is this the best signal? Let's continue. VPL's on this list. This is Vanguard. There's a lot of ETFs in here today, Eric, and Vanguard's no exception. Also had a buy signal back at near the end of July. Sell signal yesterday, giving us that move to the downside. Let's see if we can eke out a few more. There's the Fallen Angel ETF, the Vectors, and it does look like a falling angel as it's starting to fall off of better times at 28.5. This is a small ETF. Options on this are very, very cheap, but is it the best trade? Again, Infosys. Now, you want to see something called the chop? I can already tell you Infosys is not a good trade because what it's shown us in the past is it's likely to go buy. No, sell. Oh, no, buy. Oh, wait, no, sell. Oh, no, buy. That right there is what I like to call death by 1,000 cuts. Okay, where you get these little losers, loser. And then when the winner comes in, maybe the stock has tired you out and you don't take the trade. How many of you that are watching this right now, think to yourself, have you ever been in a position where you've taken a strategy and you lost a little, and you said, I'm not going to take the next signal. And damned if that next signal was the one that took back all the losses and just went crazy in the direction, and you watch the train leave the station and you're standing there handing your bag with your bags in your hand. All right. It happens to the best of us. The way that we try to avoid that using this strategy through quantum scripts is eliminating the noise. Okay. CCI. Buy signal, sell signal, literally at the same place. It didn't really move up that much, kind of rolled back over, and Crown Castle is now showing a sell. All right. And I could just keep going on and on and on. Here's Masonite Corp. I'm going to end with this one, and then we'll take a look at what my top 5 are here in just a few minutes. But you've got 82, went up as high as 94, rolled back over. Where's the sell? 84. So if we were to follow this absolutely to the letter, you're really looking at an 82 to an 84, so a 2-point move. But look at the run-up. The run-up is how good did it get before it started pulling back? 82 to 94. That's 12 points higher, right? That is a 15% move in the stock in about 6 weeks. What can you make on a 15% move when you're trading options? Let me just say this, a whole lot more, okay? A whole lot more. So as we're going through looking at scripts, the one thing I want to mention with you for the next few minutes is, okay, so how do you take that list? How do you go from 65 to 27, which we did, and we say goodbye to the rest, see you next quarter, see you next time you might have a signal, build up a portfolio of winners, and then maybe we'll include you next time. And that's what we're looking to do with the other half of the trades that never even made it to the second cut. But going from the second cut to the third cut takes more than indicators and noise filters and scripts. What it takes is AI and backtesting. And so backtesting, I'm just going to talk a little bit about how what we first did just with the 1030 as an example. So you get a 10-year backtest with Google. So I started looking at this all the way back in the 90s and early 2000s, and I got my hands on some data and was able to do backtests. And so what I did here was I just made a simple little backtest, which is anytime the 1030 moved up, I want to enter the following day. If it went down, I want to get out of that day. So this is for a long trade setup. You get in when the 10 crosses above, you get out when the 10 crosses below the 30. You can do the same thing with short trades. So I applied this to Google all the way back when Google first started getting started. And here's what ended up happening. I saw a lot of winners, couple losers, and I'm always looking at where my worst loser is. Because the first thing I'd like to do, and by the way, looking at a summary, if I run something and my average trade profit is a negative, then I know this system needs to be thrown out and got to start over again. But this started out with a profit. I'm like, wow, George was right. This 1030 does work on stocks that are alpha stocks. So we see, a win percentage of just under 52%. And the things that I ask myself is, all right, how can we make the system better? How can we make the system better? And part of that is with noise filters. And part of that is with again, back testing, continued back testing. How about adding a stop loss in and getting out when something moves against you by a certain amount? We've done that. How about doing something called pressing? It's a money management form where you press your profits. We've done that. And we're able to get ourselves up to a really nice looking graph. And we did that with Google. I'm going to share those continued results with all of you tomorrow as we get into how to really look at those trades. But at the end of the day, when we ran all the scripts, and I want to just show you real quick, I want you to look at a couple of things here. So this was on the stock, $4,000, $4,095. Average winners, average losers, one stock. All right, one stock. And this was going back 10 years. It's a 10-year back test. So in good times and in bad. And so what I want to share with you is, how about the winners? How about the losers? 51 to 46. A lot of you guys at time, that's a coin flip. This is the start, guys. This is where we start. This is the very first back test that I did on this. Fast forward to today, and we got quantum script bulls, which are back testing out 82% profitable per stock. And you can see the reward to risk ratios are better than 2 to 1. Look at the bears. And this is going back to 2017. And you guys all remember what happened in 2017, 18, 19, 20. This is mostly bullish. And yet the bear trades, even during those many, many years up run, were still pushing 71% profit per stock with a 1.6 to 1 reward to risk ratio. So putting all that together, what we do is we add all of this together. We add all these lines of codes. We add all the back testing in, and 65 stocks becomes 27. And then 27 doing the back tests become 5. My top 5 stocks are as follows. Number 1, Manpower Group. So Manpower Group, and what you'll see here is I've put some of this in here, the more pertinent stuff, so that we can take a look at it. First of all, if you take a look here, all of these are beating the S&P. I like the beta to be above 1.0, except for one of them. And it turns out this one ends up being an investment office piece. Now you might say, oh, that might not be as good, but let me finish here for a moment. So all of them are what I like to call, with the exception of one, are alpha stocks. That means they move more percentage-wise than the S&P 500. That's good. That's what we want. Manpower Group is on here. Here's our stock close. I've got over here, the last 5 trades, 100% winners. Total back tested profits, 15, 14. This is looking at investments of no more than $500. Right? Max back tested profit was 725. Back tested loss, last 5 trades, so we didn't have one. Look at Shutterstock. Shutterstock has a 1.8 beta relative to the S&P. That's great. But look at these return on investments too. Return on investment, 103% for Manpower, 64% for Shutterstock. It had 3 trades, 100%. Last 3 trades that happened in the last year. I did this, what have you done for me lately? Because all 27 stocks, they came out positive. Well, let's take the best of the best. And that's what we did. 696 was the total back tested profits. Look at this. One of the trades in there made up most of that. And that's what we're talking about, is that you got to be in it to win to get that kind of money. Whirlpool was our third 100% trading back test. Okay, there's the international hedge fund equity, and that was also 100%, but it didn't make as much. All right, it only had a return on investment of about 26%. But then look at Chewy's. Chewy's was one I showed you earlier today. I meant to show you that one because it did end up in the top 5. It has a 2.00 beta. That means it moves twice as fast as the S&P 500 on the way up and on the way down. It's a cheaper stock, which means its options are going to be cheaper in terms of price. Maybe not volatility. That's something we still need to find out. But folks, what you're looking at here is, once again, our top 5 trades. Now, what I'm going to do is I'm going to talk about these more tomorrow as we take these 5 down to the final trade. And from there, we'll be able to, not only that, but I'll show you how we place that trade. I'm also going to show you how we put the profit targets in and stop losses if you like too. All right. We are on again at 1 p.m. for our Operation Surge Strike members. And once again, we got, I think, about a half hour left. You want to join us for that 93% off rate that's going on right now. Call that number that's on the screen right now, or you can click on the link, and that's going to be coming in just about 30 minutes. We're going live. Mike Wade is going to be coming in live with everybody to talk about what's happening with Operation Surge Strike and our trade. We've got a trade for today, and I don't want to spoil it. I'm not even going to tell you what it is. You got to come join us at 1 o'clock. You'll know what we're doing. And so we do have a new Operation Surge Strike trade coming out. Otherwise, folks, if I don't see you in the next 30 minutes, I'll see you tomorrow for part 3 when we actually dial this down to the best possible trade. So till then, have a great rest of your day. I'll see you again soon. Bye, everyone.